Welcome back, guys. Today we're going to analyze T Mobil. Now, in the last two videos, we did the other telecom giants, AT&T and Verizon, so we're going to compare T Mobil to those ones. And T Mobil is another really big player in this space. Their main competitor being Verizon, because Verizon is also fairly good with 5G, and T Mobil is the leader in 5G. So it is also the largest company in this space, according to market cap. So over the past 5 years, it has grown by 123%. That has outpaced the S&P 500. This one has been performing quite well as of late. Maybe that will continue, maybe not. We'll see. They are a $193 billion company that is larger than AT&T and Verizon, and their price to earnings ratio is 22, whereas AT&T's was 9. So they are on the pricier end, but they are the leader in 5G. So it makes some sense, I guess, especially with their latest performance of 122% over the past 5 years. Let's check out their financials and see what they're actually doing. Are they growing? Well, actually, they did some acquisitions, or maybe they were just building out infrastructure or something, but their revenue actually pretty much doubled from 2019 to 2021. But ever since then, it's been pretty flat. It actually declined for a couple of years. So I would kind of expect that moving forward, probably just modest revenue growth moving forward, unless they do some other acquisitions. Um, their gross profit margin has been increasing over the past few years, so that is good to see. And their operating income, of course, follows along quite well. And they do spend quite a bit on capex, so that is probably the reason why their income hasn't been following as much as their pre-tax or as their operating income. Yeah, they've got a lot of unusual expenses in here. Probably not going to see as much of that moving forward as well. They have been diluting shareholders probably to raise money rather than taking out a lot of debt. Well, actually, no, this was probably the acquisition, and then they actually have been buying back some shares. So the balance sheet, they have a lot of debt, just like all the other telecom giants. $107 billion net debt. We'll have to take that into account when we do our model. And cash flow, well, they have spent quite a bit on capex, and that's why their cash flows are so low. But last year, they actually bought back $13 billion in stock. So this is a company that prefers to buy back stock rather than pay dividends. It does look like they paid a small dividend as well. Let's take a look at their margins. Their ROIC quite low. Their gross margin up to 46%. That's pretty close to like Verizon and AT&T. And operating margin, net margin getting up to like 12%. Pretty sure Verizon was at 14%, so I'll probably get T Mobil up to there. Let's check the analysis. Well, this is the analysis numbers that Yahoo Finance has. The average estimate is $9 per share for this year, and then moving all the way up to $11 a share. So that is like a 20% growth rate. Maybe just for that year. I don't really expect that type of growth to continue. And their revenue is only going to grow by 2% this year and then almost 4% next year. Checking out their short percentage. Their short percentage is around, well, 2% of outstanding and 4% of float. That is quite high. That's kind of a red flag, honestly. It's much, much higher than Verizon and AT&T. And literally just based off this number, I would rather take AT&T or Verizon over this company. Yeah, usually people that are shorting a stock know what they're doing. And so when it's higher, then that's usually a bad sign. Let's look at the model that I have for these guys. And I put the estimates here, buybacks here. They did 13 billion last year. I'm guessing 10 billion this year, and then net debt of 108 billion, discount rate of 10% because I want a 10% return on all my stocks, and an exit multiple of 18. Now I did AT&T and Verizon at 15, but T Mobil is the largest company in the space, and they are the leader in 5G, and so that's why I have their exit multiple a little bit higher. I think that's fair for T Mobil. Here's their growth projection. So, like I said the analysts are projecting 20% growth in their earnings, and I just put that down to 2%, and we can see if this scenario plays out, the fair share price being $167 a share, which is pretty close to their current price. However, when you factor in the amount of debt that they have, then their fair share price falls to somewhere in between these two numbers. I'd probably put them at like $110, $120 a share. So at this moment, they are way overpriced. And then with the revenue model, they just have modest revenue growth unless they're doing acquisitions. And the profit margin, I have the profit margin getting all the way up to 15%. That is even higher than Verizon. So this is pretty rosy scenario, I think I'm painting. And even with this, they are way overpriced. They're even overpriced without the debt. And when you count the debt, then they are way overpriced. Probably put them at like $100, $110 a share. So yeah, out of the three, I'd probably take AT&T or AT&T, and I'd probably stay away from T Mobile at the moment. However, there is, yeah, Warren Buffett does own some T Mobile. It's a very, very small position for him and a very small position in T Mobile. But yeah, I mean, Warren Buffett knows quite a bit of stuff, so maybe that's the reason why this trades at a premium. Not quite sure, but yeah, I wouldn't buy this stock. I think it's going to underperform moving forward. But yeah, that's what I think. Let me know what you guys think in the comments and hit that like button. I'll see you in the next video.